Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 6th of December, 2023, time 5:40 p.m. I happen to have my phone in my hand here, and I'm looking at a story. Electric vehicles are losing 49.1% of their value in the first 5 years. In the past year, the prices have dropped even quicker, with Tesla leading the charge. But the Taycan, that's the Porsche, I call it Taycan, but it's Taycan, isn't far behind. Listen to this. The average used Porsche Taycan value is down 28% compared to this time last year, according to Four Wheel Trader. YouTube channel embedded below, and certain expensive models are down 40%. Okay, that's wild. Now, I bring this up because nothing goes to the sky forever. I have a buddy that in Chicago is one of the top Rolex dealers. I mean, you go in and there's, I don't know if he's got 1,000 Rolexes in his operation. I mean, it's unbelievable what you see. What you see is only part of it. What he's got in the back is unbelievable. He's one of these people that takes in used Rolexes, they get refurbished, and out he goes. He's in auction sites and runs it. But they're down hard. You're looking at the price of diamonds. They're coming down so much that the site buyers no longer have to take the diamonds at a site buy. That's unheard of. First time I ever heard of that was last month. And I have a good, very good friend that is a site buyer out of Israel, and I'm shocked to what I'm seeing. Then I had friends that came over and they had on the new synthetic diamonds. Have you looked at one? I can't tell the difference between a synthetic and a real, and yet they're making so many, their prices are nosediving. In other words, the laws of supply and demand don't go away. Nothing grows to the sky, remember that. Something big is happening in the futures markets, and the question is, why? Did you look today at grain prices? Energy prices. Energies, you're under $70 a barrel in WTI. This isn't a misprint. These markets were down at $1.4 a barrel today. No big news coming out. If you looked at the API and the EIA numbers, you're building in the distillates and in the gas stocks. You had a small decline in the oil stocks. It's that the market is perceiving demand issues and continuing high production out of the United States, overwhelming a fractured, I want to use that word, a fractured OPEC, that people are greedy there and they don't want to stand with the Saudis and take their production cuts to support price. Now, what will bring all of them around are lower prices. That's just how it works. Eventually, the pain threshold gets there and you go, yes, we will join you. Please, Russia, please, Saudi, cut a little bit more. We will join because we don't need this price coming down this much on us. That's probably the next event that takes place over time. The stock market has been relentless to the upside, but now, as I told my clients in my subscriber video, I think we're in for consolidation churning, where you're up, down, back and forth. Part of the reason is you're in jobs week. You had JOLTS yesterday. You saw the ADP number, a softer number than expected today. They're talking the jobs report number on Friday, 180,000 is the headline survey number, but there are whisper numbers of 156,000 out there. Tomorrow we get the Challenger Gray of the corporate layoff, so we'll see just what they do. Bonds and notes continue to be exceptionally well bid. Are we going to see a crack under 4%? In the 10-year note? Who would have thought that? Weren't we just seeing the monster boys buying? I'm talking the billionaires, the big hedge fund guys, saying that they're buying now because this market is going and going to keep going over 6% in the short-term money. Well, that's not happening. It's the exact opposite, which just proves to me the point that no matter how much money you have, you step into these markets, they're landmines at times, and you've got to be very careful. And you have to learn to pick your spots. Trading for the sake of trading makes absolutely no sense. Your broker will love it. I'm a broker. I love it when you do it. But I'd rather you trade when it makes sense. Got it? That's really the way. I don't want to go out and get new clients. I want you to be my client and stay around. In the gold market, you are down $106 from the recent peak. It's that simple. So the market got too high. Again, that's part of my story. You get up to numbers that you can't support right now. And why are bonds and notes falling this fast? Well, the marketplace is saying that there's a recession, and the debate is how big is the recession going to be? Huge bet now underway. If it's a serious recession, that's why you're doing this. If it's mild, are you overdoing the break in those instruments at this point? To the person, central bankers are not agreeing that now is the time to cut interest rates. We have next week the FOMC meeting. They're not going to cut rates. You'll hear talk from them that we're very data dependent. We will watch, and if inflation keeps dropping, here's what we're going to do and here's what we're not going to do. But the time is not right now, and you will hear that in the press conference. So pay attention to it. You're already hearing it, by the way, out of the European Central Bank members. To a person, they're doing that. But nobody is saying, nobody, that rates have to go back up right now. More and more of them are saying it's likely, the word is likely, nobody's saying it's over, it's likely that we're through with this phase of the tightening cycle. Okay. When you take a look at the S&P, it is down 1% for the week. It's not earth-shattering. It's come from here in the 4,100 level all the way up to 45.5. When we take a look right here, I know what I told you. I said distribution is the likely event right now, consolidation of this monster move. It's basically what is going on. For the past 2 weeks, you've just been getting chopped up. No, it hasn't gone just up. Take a look. If that looks like it to you, go back and have one of those shots that you had just before you watched me, or have another glass of wine. And when you look at the swing line, you've got lower highs, lower lows for the moment. So the trend on the swing line actually turned down with the action over the past 4 days, calling for a break down to the support of 45.4875. We'll see if it hits it, but that's the number I'm looking for. If you get a bigger break, well, you open the door for here, but that's not going to be the easiest thing to get to, because I think the market wants to see the jobs data, and the falling jobs data will be supportive to the market, not hurt it. Excuse me there. In terms of Bollinger Bands, they're now starting to wrap their arms around the market. See how the top band right through here, see it right through there coming there? This is racing up. So what's happening is volatility is coming out of the market, and we see that. We no longer have this action there, and it's reacting to it. So your support and resistance zones are going to narrow in dramatically on you, which makes all the more sense for the market to go to the 18-day average. Its resting zone, its line in the sand, where it tries to figure out what to do. And you did lose the bullish embedded reading, and it has stayed lost. So the odds favor that just what I'm talking about is likely to take place. It's already past tense taken place when you lost the embedded reading here, and you're just hanging at the 18-day average, trying to reach down, and I think you see it's like a tentacle, trying to come down to the lower Bollinger Band for support. You're already oversold, though. It's hard for me to tell clients to apply money to go short when you're already oversold. Doesn't make sense to me, in front of especially a big report. The market, I told you, had until December 10th to run out of the upward seasonals. Was the Dow? Well, you can see it's now flirting. If it loses, it gets under 79 in that number, it means you're probably going back here. And that one runs out. And the market that should have been the strongest, maybe it's just screaming it's not ready, is the Russell. Because the rotation of the money out of the S&P, the Dow, and the NASDAQ typically goes somewhere. You are over the 200 and 100-day average, which on a scale of 1 to 10, a 9. I hate buying the first move over those type of numbers in between the Bollinger Band. Generally, you get hurt. High percentage of the time. Not every time, but a very high percentage has been my personal experience. So I wouldn't be surprised if you get down to that number, even the 18 again, as you work off this right now, which is an oversold market. So we get to the 10-year note. As long as it's embedded, I'm just in the bull camp. How high is high? here's what the market is doing. It is not staying over the upper band. It can just keep running on you. Markets, they get over the band and stay there a few days, are buying, they're on borrowed time, because only 5% of the time do you stay over the band. But when you get to the right-hand side and you keep bumping and hitting it and not even closing on it, that's a powerful move, and you've got that power because you're embedded. When the red number's under 79 on a closing basis, the play is over, and then coming back here, there's another event happening. I have been warning you that that 18-day average was getting ready to go over the green. And if you follow me here, let's see if I can get that to do it. Nah, it's not going to do it, unfortunately. But you just had it happen today. It wasn't there yesterday. So tonight, you're getting your bullish crossover to take place. Fully embedded here. Bullish crossover. New highs on the move. You hear me teach this all the time. I'm recording moving averages right now for my course, and I cover a lot of that in it for the new charting course. In the dollar index, you're getting to the point where I think you're getting a little rich in the tooth now. So you've gotten back to the 18-day average in the 100. I'd be careful. What did the market pay attention to? It went down to the 200-day average in the Bollinger Band, and yeah, for 2 days it got under it. It doesn't mean anything. That's the zone that it should have had great trouble. It's like me telling you when we're looking at the Russell. I have a very hard time telling people to buy over the first challenge of key moving averages. Well, the same thing here. I wouldn't be telling you to sell under the first time under that. Now, once you've got under it a while and you keep coming back to test it, that changes the game. But this was the first challenge of that. I can go, just think how far back you'd have to go. Remember, futures, the reason this average doesn't continue is there's not 200 days of the D-Dollar bond index. So it picks it up on day 200. So you got to go there, and that's where it picked up at that point. Got it? So you have more than 200, but you have to add to it from that point on to get the first dot of 200. In the eurocurrency, higher high, lower low. When we were up here, I said, is it going to be able to hold on the first challenge back here? And I don't think it'll let me do this. No, it's not going. Oh, wait, it is. It's crazy how it is. Let's go back and talk about that because it let me do just what I wanted it to do. This was your first challenge back, and you broke through that. So you lost the bullish reading, pointing down. You're already at your profit objective. Maybe you have a lower one, the 200-day, the gray, as you can see. The market goes down, hits it to just prove, thank you, Ira, you taught me the good way. And now the question is, what does it do here? Because now I'm lost. You don't have a trend. You have a higher high and lower and low. You have the bias down, so no trend, bias down, and you start eking down. This is Tuesday's action. This is today's, and this is tonight's action, okay? I think it'll end the decline in the neighborhood of the lower Bollinger Band now, which is going to be the 107.25-26 area, your 107.69 as we're talking. Another 40 points. This doesn't have to get there because it's oversold, but it's a possibility. In the British pound, you are now coming back into the support, the 18-day average. Are you learning yet? Do you lose these numbers in these markets? Come unglued and they start offering you opportunity. Watch. You lost your reading. You should make a run for these numbers. Bingo. Okay? I have been telling my clients now we're at the zone to take some money off the table. That doesn't mean you're not going on to 50,000 or wherever the heck this market wants to go. Why am I doing this? Because I originally thought you'd get to 42 to 45,000, and now you got 1, 2, 3 days over the upper Bollinger Band. 5's about all you get. Take some money. What is the market counting on there? You know what it is. It's the ETFs when they come out. How much of that's built into this price? Well, you've just come from 30,000 roughly up to 45, so you got a lot built in there. In Brent versus WTI oil, okay, back to 479, but look at how this puppy got hit today. Take a look at this. The market was down nearly 4% today, down 290. The low was 74.11. You closed 74.30. This is a monster break. This is a market that I said to you on the day of the OPEC meeting, nonsense. This voluntary, when they can't even get them to agree on a statement. Remember that? There was no OPEC statement. I said, don't you believe one word that they're saying, they got a problem. I wish I was as smart to have gone short, but none of my work would tell me to go short. It would certainly tell me not to be long. Wow, from 74, from 84. You don't think that's a big break? Come on. That's a monster break, and it's due to the facts of what I'm telling you. Okay, there's too much supply still on the market, and if bonds and notes are right that you're going to have a deep recession, this is still overpriced. You can go to a 6. I mean, really, somewhere in the $60 range. Be careful here. This market can do anything if the economy, if the bonds and notes are right on it. It certainly will be a slowdown. Do I think that's going to happen? Not that way. Do I think the market's getting overly bold with their ideas where interest rates have to go right now? I do. I think they're getting too bold. But we'll find out more on the jobs data. I'll take it a day at a time. It'll give me my opportunity. Heating oil, if the crude and the other's no good and you're building stocks, you got the same problem. Is anybody looking out their window? Does this feel like a bad winter so far? We're going to be 55 degrees in Chicago tomorrow. Is that winter time for December 7th? I don't think so, okay? And I mean, you just need a fall jacket. You don't need a winter coat in Chicago. It's unbelievable. Natural gas. We are producing 13 million barrels a day or whatever of oil. We're getting a lot of natural gas, and we have a warmer than normal winter. You're just putting it away into storage. This market is still coming apart. There's no bull story I know of other than you get oversold, and you're not. You're embedded, so it's still quite bearish. So when I put everything together, I'm not in the bull camp. I'm still very much in the camp, in the stock indices, consolidation, back and forth action in the currencies, coming down to maybe they'll get themselves overdone. I'm in awe of the rally in the bonds and notes, and there could be a lot more in the energies if the bonds and notes prove right that the economies are going to be weaker than I happen to think. By the way, pay attention to sugar and cocoa. They got hit. So you're getting deflation in commodity upon commodity upon commodity. Want to learn more about how you can learn to work with the Bollinger Bands the way I do? Go to my website, iraepstein.com. Under the word education, the course is right there for you. I'm Ira. You have a great evening. Talk to you tomorrow.